Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. As we come to the end of the second quarter and head into the second half of 2022, rapidly surging inflation, rate hikes and recession risk, they are now emerging as the three biggest and most explosive macro themes driving the financial markets. One of the most highly anticipated FOMC meetings of 2022 and quite possibly the most monumental monetary policy decision in history of the Federal Reserve, that took place this month with the Fed announcing a supersized rate hike. Declaring that it's essential to tame inflation, the Federal Reserve, they raised their interest rates by 75 basis points, the biggest increase since 1994, with Fed Chairman Jerome Powell signaling yet again another jumbo-sized hike next month. Over the last 12 months, inflation has spread to every corner of the economy, with the primary cost of living expenses from food to fuel to rent, clothing and energy prices rising at double-digit annual rates for the first time since the early 1980s. There is no denying that the Fed has fallen way behind the curve in tackling inflation and is now in a high-stakes race trying to desperately play catch-up. Evidently panicked by sky-high inflation, the Fed is now stepping on the monetary policy brakes too hard, in much the same way that it kept its foot on the accelerator for too long last year. With inflation running out of control, the only plausible option left now is for the Federal Reserve to continue raising rates aggressively until policymakers break inflation. But this may also come at the risk of breaking the economy, and the Fed is not alone in this journey. We are now in a new era for central banks across the world where lowering record high inflation is their only objective, even if that comes at the cost of a recession. One day after the Federal Reserve's biggest interest rate hike in 30 years, many other central banks, they jumped on the rate hike bandwagon, scrambling desperately not to be left behind, in what can only be described as a panic move, unleashing havoc across the financial markets. This month, the Swiss National Bank made a surprise 50 basis point rate hike for the first time in 15 years, whilst the Bank of England, they moved rates to the highest level in 13 years as it anticipates inflation to hit 11% this year. Elsewhere, the Reserve Bank of Australia equally surprised the market with a 50-point basis hike, whilst the Reserve Bank of New Zealand and the Bank of Canada, they followed suit with their own 50 basis point rate hikes. In total, more than 60 central banks faced with rapidly surging inflation, they have now joined the global race to hike rates aggressively at any cost necessary. This in return has increased the odds of a recession to 85%, with a long list of leading Wall Street banks predicting significant risk of a recession by mid-2023. One reason why Wall Street is convinced that its new hawkish era in central bank monetary policy could bring on a recession is that it has already caused the asset bubbles it created last year to burst. Since the start of the year, global equity prices, they have fallen over 30%. Foreign exchange markets, they have plummeted to multi-year lows, whilst cryptocurrencies have crashed the hardest, with Bitcoin down over 70%, whilst other tokens have lost over 95% of their value. Whilst all risk assets are now officially in a bear market, on the flip side, commodities across the board, from the metals to the energies to the soft commodities, they are now officially in a bull market, and only 18 months into potentially decade-long commodity supercycle, according to Goldman Sachs. As everything from equities, cryptocurrencies to the FX markets continues to crash throughout this year, there's no denying that commodities, they have proven themselves as the most reliable and stable asset class out there. This is incentivizing savvy traders to diversify their holdings into commodities to maximize on the dual benefits of safety and high returns on offer in this new economic climate we now find ourselves in. Extraordinary times, they do create extraordinary opportunities. As traders, we're living in some of the most rewarding times ever in history. Right now, the commodity markets, they're moving in very predictable ranges, presenting savvy traders with an incredible flow of week-to-week opportunities to capitalize on the short-term macro-driven volatility. Looking ahead, more big moves could be on the horizon as we head into another highly macro-driven week, which kicks off with the European Central Bank's annual forum, where ECB President Christine Lagarde, along with Fed Chair Jerome Powell and the Bank of England Governor Andrew Bailey, they will meet to discuss their hottest topics right now, from surging inflation to rate hikes and recession risk. Also on the radar next week will be the closely watched US PCE inflation, Eurozone inflation, and US GDP data releases, which always have the potential to move the market significantly. So with that, let's go over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. So first off, gold, again, as we discussed with you last week on Gold Asset of the Day, opportunities throughout the week to keep snipering in at the lower end of the channel each time we're dropping back down towards the 1820 zone. In fact, we capitalized on a very fast breakout to the upside midweek where we had a breakout of 200 points, banking those profits very quickly and then essentially reloading yet again once we revisited the 1820 zone here on Friday. You can see, in fact, we dipped all the way down to 1816 and then we've closed back at 1826. Very robust zone right now for gold. Similar with silver too. As you mentioned previously, each time silver is dropping back down towards 21 US dollars per ounce or lower, this is an area of accumulation, an area of liquidity, and multiple times we're seeing silver close back above that zone. It will drop very briefly below $21 per ounce, but essentially close back above it. You can see this very notably going back to the lows of May here as well, where we capitulated from the 2050 zone and then broke all the way back out to $22.50 per ounce. We're very much range bound at the moment. We're still, I perceive, opportunities to sniper in, accumulate at lower prices each time we are dropping back below 21 US dollars per ounce, and then just take advantage of the range bound volatility that we're in at the moment. Bank on strength when you do get those quick impulse move higher, particularly as we keep seeing on gold lately. Over the last month here, there's been multiple opportunities to bank a quick 500 points on the breakouts here on gold. Make sure you bank on those impulse moves like we saw off the CPI data at the beginning of June where we had a 500-point breakout, and also the breakout from the FOMC statement. Again, over a 500-point slingshot move higher just within a couple of days. So it very much is a range-bound market at the moment. It is a trader's market. It's not buy and hold. If all you do is buy and hold in these markets right now, you're just going to get crushed. You want to make sure that you're trading this constant volatility in the commodity markets. And of course, the most important point there is making sure that you're buying low in order to then bank on strength when you get those breakouts back towards the upper end of the ranges and back towards previous swing highs. A great example of that at the moment is oil. We sniped it into oil on Friday with our clients at $103 per barrel and 85 cents. And in fact, just within a few hours on the breakout that we had later on in the afternoon, we banked 430 points profit. Very fast profits on crude oil on Friday. Again, we waited for consolidation at the lower end of the channel. We got a confirmation on Friday to go long, and very quickly we saw that breakout into Friday's close. As you know, we have earlier positions that we still hold on energies. We've got 4 trades on oil. We've got 2 on WTI crude oil, 2 on Brent crude oil. Again, 2.5% gain to the upside on Friday, and it's just perfect to wait for the price to come to you. Be patient, wait for the corrected price action, wait for the price to come all the way down to the lower end of the channels, then sniper in and capitalize on these fast impulse moves. Another market I would absolutely have on the radar is platinum. We've mentioned it to you for a long time now. Platinum, very interested if we get a break all the way back down to $900 per ounce or lower. We're almost there. We're at 903 US dollars per ounce into the close on Friday. Ideally, I would like to see this market roll over and break down back below $900 per ounce. Between 900 down towards the 850 zone are certainly areas of interest. You're then going to be grabbing the liquidity going back to the beginning of December of 2021. Also notable, hedge funds and money managers in the last week, they've increased their net long positions on gold, they've increased their net long positions on silver, and they've increased their net long positions on platinum as well. All of these markets we have exposure on at the moment, but I am looking to add further exposure on very fast pullbacks when we do dip down to the areas of liquidity I've just suggested with you. These are zones where I am looking to sniper in and add further exposure to capitalize on the current cycle that we're in right now. You can see the dollar index, since it spiked out to 20-year highs on the FOMC statement, subsequently we started to roll over. If we can, over the next couple of weeks, get some outflows on the dollar, start to break back down towards the 103, 102 zone, this will definitely help markets like gold, silver, platinum, crude oil to continue this follow-through move that we've essentially seen on Friday. So very much I have those on the radar as we go into next week. Again, we have 4 positions on oil at the moment. All of those are actually protected because we bank partial profits on those trades. You've also got 2 new gold trades and 1 silver trade and 1 platinum trade as well. We're seeing one of the greatest wealth transfers ever in history in this new era of economic change which we find ourselves in right now, with rapidly surging inflation, the cost of living rising, energy, gas and food bills all soaring, it's once again an important reminder that you can't just rely on one income stream. If your goal is financial freedom, then you need to start building multiple streams of income. The importance of having an essential income generating skill like trading, it's no longer a luxury, it's now a must-have necessity. In the words of Warren Buffett, the best investment you can make is in yourself. You can never lose money when you invest in yourself and when you invest in new skills. If you want to upgrade your income, then you need to upgrade your skills, and there's no better skill than trading. If you want to maximize your money-making potential and thrive, not just survive in these highly macro-driven markets, then you need to adapt your strategy so that you can grow your income to massive levels. If you want to gain the ultimate edge to supercharge your wealth in these highly profitable markets, then you need to trade like the hedge funds, the money managers, the institutions, utilizing a professional, research-driven approach. Having access to the right data at the right time, it is the single greatest difference between ordinary and extraordinary results. The greater your data and intelligence, the greater your edge in navigating these fast-moving markets with precision, accuracy, and the highest levels of profitability. Trading like every other misguided retail trader out there, using outdated technical analysis and gimmicky technical indicators will not work. We're no longer in the 1980s, we're in 2022 and the age of data. Every industry right now, including the trading and investment landscape, is being disrupted by data. In this day and age, if all you are doing is relying on outdated technical analysis and gimmicky technical indicators, then you're guaranteed to get crushed and chopped up in these markets, when every other well-informed and well-educated trader out there is creating life-changing wealth. If you want to change your results, then you have to change your thinking. Never underestimate what you can achieve in the next few months from now with the right skills, knowledge, and mentorship. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join our community of successful traders and take your trading to the next level, then there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to our institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP.